Hey, Dan Passarelli here. Happy fourth quarter. Man, do you believe that it's October already? Where did this year go? Well, by the looks of this chart here, it looks like it went pretty much straight up. Well, at least from since the beginning of April. Straight up, making new highs today. The government did indeed have a partial shutdown, which means hundreds of thousands of workers are going to be furloughed, which will drag on employment, which will harm the economy. Now, once they go back to work, they get paid again, and so there's that. But there is the threat that some of these workers will lose their jobs, which of course will be contested in the courts, and so we'll see how all that plays out. If they do lose their jobs, then that raises the unemployment rate. Although we're not going to be seeing those numbers, probably not this week, because there's nobody sitting at those desks who's going to show us those numbers. So the market is operating on less information until this thing is wrapped up. The market was up today, I would say inexplicably, but I think the reason for that is we have retail people buying who are buying more emotionally. I have some evidence of that by looking at 0-day hero coming into the market today. We had this iron condor and this iron condor. These are long iron condors buying the guts. So it's really more like buying a strangle with a bit of a taper on there to make them really, really cheap. These are very, very cheap bets on volatility. Now, most of the trading in the morning was negative deltas. We did have somebody buying, this person was selling calls. This person was selling puts, but then we had buying puts. Again, that aforementioned pro-volatility iron condor, and then buying puts, buying calls, buying a whole bunch of puts, buying puts, selling calls. So it was a bit of a mixed bag, but we definitely did have more short deltas than long deltas from professional traders. So I look at that and just take in what I'm seeing. I can't make too strong of a statement because the power of the market is stronger than any of us, and it's going to do what it's going to do. So as traders, we just look on and make our best bets and guesses and trade what the market gives us. Now, one thing that the market's given us is something interesting here. That is BTU, which is a coal company. They reaped the benefit of just within the last 2 days, Trump announced that he was going to open up another 13.1 million acres for lease for coal mining. There's only about, I chat GPT'd it earlier, there's something like 3 million acres currently being mined. Now, that doesn't mean that 13.1 million acres are going to be mined. It means that they're opened up for lease. And so companies will have to go through an approval process, and they're not likely to lease out all of those lands. But as we know, Trump has been pro-coal. And so that's why we got a bit of a lift here in BTU. Now, BTU has been one on my radar for a while. It's been one that I've been long for a while, although I have written some calls on them. And so I look at the reason why I was long it earlier, back here or something like that, maybe in the summer, is because the price to earnings ratio is very, very low on that. It was among the lowest for the coal mining stocks. Now, however, it's really, really high. But I look at it, and my plan for those covered calls is to either let them get assigned or maybe roll to some more in the money covered calls so that when it pulls back to a bit of a more reasonable PE ratio, I can maybe collect some premium waiting for it to get back below that strike price. But my calls are a little bit out in time, so yeah, it's really just a waiting game. So regardless, this is an interesting stock to look at. In fact, the whole sector is very interesting to look at, looking for names that you can get at a lower P ratio. Another one that I've been looking at for a long time, I actually own some of this too, is CNR, Core Natural Resources, not Canadian National Railways, as sometimes comes up when you search for that symbol. Core Natural Resources. Now, they are at an even higher PE ratio, which means, hey, maybe they're not as good of a buy, but there is a reason for that. The reason is that one of their walls, which is how you mine for coal, they just have a strip and they have this big machine and it digs on the wall and goes down this track and then scoops up the coal and then does it again. Oh, there was a combustion situation there, and it's taken them forever to repair it. But once it's back online, that's going to be good for them. But last I heard, it is not online yet, but supposedly in the fourth quarter, it might be. There are some headwinds against this stock until that wall is back online, and then it might be able to show earnings in maybe the first quarter earnings that'll come out in the second quarter next year. We might be able to see some action in there, or maybe when the wall's up, there'll be some of that buying to get ahead of earnings. So this also is an interesting one to watch. I hope that helps. This is Dan Passarelli, Trade Smart.